President Trump is considering announcing and naming Fed Chair Powell's successor as early as this summer. What did you think of that, and what would that mean for monetary policy if that announcement were to be made sooner than expected?
Well, the first thing I thought is, I wish I didn't have to go to the Wall Street Journal podcast and talk about it. Now, I don't know what the president will or won't do. I'll just say that, we're in the business as the Federal Reserve of, trying to make the best monetary policy we can. And certainly my theory of the case is I'll listen to anybody. And, there's lots of people in the media and in Wall Street who have different points of view on what we ought to do. And, I like listening to folks. Sometimes I learn. Sometimes I have a different point of view. And I'll behave based on what I think is the best thing for the economy. And that's what I just always do.
So it seems like we're at such an interesting moment for the Fed, where a lot of people want the Fed to start trimming interest rates, including our president. What would it mean for monetary policy in terms of this announcement? Let's say if the financial markets, if investors, in anticipation of a new Fed chair, start pricing that into, say the bond market, what would that mean for monetary policy, and how would you view those clues from the financial markets?
Well, we do our best to telegraph what we think we're going to do, in the world of high uncertainty that we live in. And financial markets behave accordingly. It's not always the case that financial markets are in the same place that we are. If you look at the last 2 or 3 years, in fact, for most of the time, there's been a meaningful divergence between the average financial market forecast and the median of the S&P. They tend to converge in time. If you look at the fall of 2023, the number of rate cuts people projected for 2024 versus what the median S&P was, they were wildly different. By the end of 2024, they were about the same. So, these things work their way over time. I guess I'll just say the president will name a new Fed chair. I mean, Jay's term ends, I think, in May. And so I don't think there's a lot of news for the markets that there's going to be another chair. We'll see who he names and when he names them, and we'll just do our best to keep our eyes on the road.
Yeah, and to your point, investors have kind of gotten this repeatedly wrong over the past few years.
Well, I guess I just come back to the fundamentals, which is that economic forecasting is really hard. And it's really hard because the economy is huge and multi-dynamic, and people have very different views on how things are going to play out. It's hard because exogenous factors always show up. And so, I don't put that much weight on people's forecasts 3 or 6 or 12 months from now. I like to say, let the economy do its business, and then the right policy will be pretty straightforward as we learn more about the economy. And that's worked very well for me.